Hello everyone, today I want to tell you about an absolute winning strategy. Before I start the demonstration, I want to ask you to subscribe to our channel. There will be a lot of interesting things about options trading. With the information provided on our channel, you will be able to make money and hedge price risk with options. You will probably say that there are no always winning strategies, and you will be partially right. There is risk everywhere, even if you put money in the bank, for example. There is currency risk, insurance risk, counterparty risk, and so on and so forth. But options are a unique instrument, and there is a certain strategy that demonstrates 100% positive result under certain conditions. The first time I used this strategy was in 2006, and even when the situation for this strategy was bad, when the market went against me, I still managed to make a profit. The idea is that any price movement is limited. If we look at stocks, stock options, for the market to grow, for the stock price to grow, you need investors to come in and buy the stock. The growth potential is limited by the amount of money investors are willing to invest in the stock. The same thing happens in cryptocurrencies. But this is true only for maximally capitalized cryptocurrencies like Bitcoin and Ether, where the risk of manipulation is minimal. Therefore, I will demonstrate the strategy with Ether. The strategy can be used both when there is a rise and where there is a fall. Let's say that we expect Bitcoin to rise after its recent rise. It went up to the 30K level, now there is a correction and it goes to the 27K level. Bitcoin's growth potential over a certain period of time is limited, just like any other asset. Therefore, we can sell call options of strike 29, 1,000 contracts, 1 Bitcoin. We sold it at $1,140, for example. We can see that the maximum profit, right here under the cap, if the option expire out of the money, would be $1,140. The margin requirements are $5,000. All would be fine if the price doesn't go up, but it doesn't work that way. No one is giving away free money. We don't believe in free money and we expect the price to rise after all. Let's say the price rises to the strike value. In this strategy we have negative delta, time decay working for us. Let me remind you, as the expiration date approaches, the time decay eats the options premium, and that's good for us. But this is if the market is not going against us, if the Bitcoin price is not rising. Let's assume that everything is bad, and everything is against us, as it always is. Let's say the price goes up to 29,000. Of course, this rose is not instantaneous. It happened after some time, for example after a week. The price went up and we went to minus $400. What should we do then? We need to roll the call option to the next strike. We buy back the sold call options of strike 29 at the price of $1,575, taking into account the delta loss. Open price $1,575. And now we need to sell options of the next strike. Let's say strike 30 minus 1,000 contracts, but we will need to sell more. I'm working in the desktop terminal today because it's easier to model here. At that point in time, the price of the call options at strike 30 will be 1,150, which means that in order for us to restore our original credit, $1,140, we need to sell not 1,000, but 1,500. No, just a second. Even more. Now we need to correct some data. Date and options price 1,400. That's how many strike 30 options we need to sell to cover the delta loss. The credit has even gotten a little bigger, not 1,140 as it was originally under this cap, but 1,175. What happens next? Bitcoin continues to rise. Everything is against us again. We expected that the price would not rise. Expiry happened out of the money and we took our profit. But that's not what happened. We have to be prepared for the risk. Suddenly Bitcoin went up and reached 30K. And now we can roll again. Our option went up and its worth became $1,378. Goes in the money again. And we buy it back again. 1,400 options. At price 1,378. And we're done. And we sell the next strike with credit. Strike 31. How much will it be worth? No, wait, we need to adjust the date and options price again. I emphasize that what I'm showing now is just an example. I'm showing how to construct, how to do the calculations, and understand margin requirements. The theoretical price of this option is 960, meaning options get cheaper over time. So we need to sell 1,800? No, not enough credit. We need more. 2,000? Yes, that's enough. And look, the original credit is back. Why are we dragging this 1,140 so hard? The idea is that sooner or later the price rise will stop. And we need to expire under the cap out of the sold options to get the original credit. And we need to keep our margin requirements under control at all times. I have them up to $8,800. We should always try to make sure that the deposit is enough for our strategy. I would go on endlessly. The rolling procedure would be exactly the same. But now the extreme case. We are running out of funds. What can we do? We can drag the delta till expiration and make it neutral. I buy 1,160 futures. The margin requirements are reduced and the delta becomes neutral. Our strategy becomes a straddle and we hold it until expiration. We do this if we can no longer financially roll sold call options. It is possible that the price growth will stop. It will return to the value of 29, and then everything will be even easier. But I advise you, of course, to make preliminary calculations so that you have enough deposit for rolling, as the margin requirements increase with each roll. It is not necessary to build the strategy on sold call options. If you believe that the Bitcoin price will not fall too much, you can build the reverse strategy. And you can sell puts. And in the worst case scenario, if you sell put options and the price goes against you, it falls. You just get Bitcoin at a very good price. But in case the price keeps falling, your algorithm of actions is exactly the same as I showed you before. And I think this is the end of this video. Thank you very much for watching. If you liked the video, please like it, ask questions in the comments and suggest your own topics. Successful options trading and goodbye.